Hi. First of all, apologies for my being late. My name is Michał Pękała, and together with Hubert, we'll be speaking a little bit about VCs, how to do VCs in Poland, how to do the first VC transaction from the perspective of developer mostly, but maybe you'll also have some insights if you're a potential investor. Before we start, I have one question. How many developers we have in this room? Can you raise your hand? Nice. How many investors do we have here? Okay, so please remember, you have these two gentlemen sitting here. These are the most important people in this room. I'm not important anymore. So please talk to them. Thank you. No, but seriously, let's talk about first about VC. This is going to be a high-level presentation because the topic is very broad and very deep and very detailed. And I encourage you to ask us as many questions as you like. Together with Hubert and the rest of our team, we are here at Digital Dragons today and tomorrow. We'll be attending all of the parties tonight, so make sure to ask us any questions. We deliberately decided not to delve into all of the topics and all of the details of how to go through your first VC in Poland because that's, well, impossible in 40 minutes. So instead of trying to do so, I will go through the high-level overview of how the VC works. Hubert will follow up with some more detailed analysis on some key aspects, and then please ask us any questions that you have. Okay, so the first VC may also be the fear of the dark. But why is it? What is the VC in general? So VC, the abbreviation stands for venture capital investment. And in basically, without going into the legalese of this word, let's just say for you to know that the VC investment is probably the first situation where you as developer invite somebody to invest money in your company in exchange of for shares in your company. This is like the most basic approach to any VC. You have your own company. It don't have to be young. It can be you may have a company for several years on the market, but at some point you decide that either you want to have some bigger, more money for your investments, for your capital, or you're just so mature that somebody is interested in your company. So in that situation, this is VC in like in a nutshell. Somebody comes to you and wants to invest money, put money in your company, buy shares in exchange for like the future opportunities and doing projects together. This is VC. And the second question is whether the VC is for you. And the obvious answer to that is, well, yes, because you're sitting here in this room. But the other question is when this VC may be for you, because it's from the perspective of any company, not just the video game company. It's always is very lucrative to receive money from the investor, but at the same time, company needs to be at least prepared to receive that funding, to receive the professional relationship of the investor, because the investor that will come to you most likely be professional. That would be an entity, either person or venture capital fund or another entity, maybe in a publisher or some other entity from the video game market that has some experience, at least some experience, that done some business before in the past, and has some knowledge that wants to share with you, wants to help you, but also wants to make profit based on your company, basically. So to that extent, you also, as a developer, should prepare yourself to the best of your ability to receive that investor, especially in terms of to understand how the process of the VC transaction works, what should you expect, and what to prepare for the transaction. So from the perspective of developer, there are some key factors which are not exclusive. These are the key factors that, based on our experience with Hubert, we believe are like the most common, probably maybe the most important to follow, to understand, or at least to comprehend. And the first one is to have a team. This is based on our experience. It's probably, if not the most important part for the investor to consider any company to invest money in it. It's at least one of the most important factors. to have a team of people that can show experience, that can show coherence, that they can show to the investor and then to the market, to the public, that they know what they're doing, that they are good at doing games. You do not have to, I don't mean that you need a team of people that know how to run business. This is where investor comes in and helps you with growing your company and doing business, but you need to have a team of people that know the games, the game industry, how to make games, how to develop, how to code. So any experience in that matter, it's the benefit. It's the benefit. It's like one of the most important things. The rather common mistake that is being made by young developers is to seek VC funding by a group of people without experience. So even if you have great idea, you believe that the game that you're about to create will be spectacular, without any experience by working in the video game industry, it is very difficult to convince any investor to give you money, just because you don't have any experience. Another one is being a little bit harder. You need to know the numbers. And by the numbers, I mean you need to know the numbers within your company. What money, how the amounts of money that you have, the costs that you have yearly, monthly, weekly. What are the costs of your team? What are the costs of your hardware, of software licensing that you create? You need to understand what's the cash flow within your company. I don't mean that you need to understand these numbers to the level of accounting services. These are the accounting services for, and also investor will help you with that. But at least you need to show to investor that, well, that your company is stable, at least to the extent that it's not on the verge of liquidation or bankruptcy. If this is the case, it would be harder to find any investment unless there are some objective factors that you can disclose to investor that I have a great project, but we have just faced some unexpected obstacles on the way that forced us to spend more money. It can be explained, but if this is the case for the company that exists, for instance, in the market for 2 or 3 years, and you're consistently on the verge of bankruptcy or liquidation, well, that's a bad sign for any investor, because it shows that even with smaller amount of money, smaller team and smaller project, you do not know how to handle that basic cases, basically. Another one is to have a plan, and it can be any plan, but from the perspective of any entity that is about to give you money, well, you have a team, you know the numbers, you also need to have a plan. So the plan is important because the investor wants to invest and believe in the team itself, but that team itself should have some kind of a vision for how the company, maybe not the company as an entity, but the project itself, what do you want to achieve with this project? For instance, you are doing the first-person shooter game, and the investor would like to know, what's your idea about the target? Where do you want to market it? How do you want to sell it? Whether do you just want to make the game and just like make launch 1.0 of the game and just finish the project? Would you like to think about like extending the life of the project itself? Do you have any ideas about DLCs, the support? How do you envision that? You don't need to have the answers like on a level of detail, but at least some kind of vision is important from the investor. These are the questions that will be asked to you like with any interaction with potential investor. And last but not least, be honest. This is, I was struggling whether this should be the first factor or the last factor. I chose to put it on last, but not because it's the least important, but because it's the most important. You have to be honest. From the very first interaction with an investor, be honest. Do not try to hide anything. Do not try to explain the things that are happening in your company in the better view, just for the sake of receiving better recommendation. The investor will find out. Sooner or later, it will all resurface. So from the very first meeting with any investor, any publisher, or anyone who wants to invest in you, be honest. Tell about explain your difficulties, the things that you do not feel comfortable with. Also, of course, explain your strong sides, but also do not be afraid of weak sides. It may seem that this advice is is control logic, but it's actually not, because investor wants to do business with you, and at the point when the investor enters the company by obtaining shares in your company, it's your partner, for better and worse. And your partner wants to understand the position of your team, of your company, how the investor can help you. Because if you say that, well, we are very weak with accountings, or we do not know how to handle QA or marketing, well, there's an investor who has experience and may also know people that can help with those fields. So this is very important. And it builds on the trust between you, an investor who will potentially may be your partner for years to come. So that's very important. And from the perspective of investor, well, the first thing that needs to be pointed out is that investors, like any other entities in any field of the market, are not the same. So do not attribute to like the general idea, picture of investor like this entity in ties and suits that they just follow the Excel tables and don't understand anything. They do understand a lot, especially in video game industry. If you speak with professional investor who invested in several video game companies, they will know a lot of answers. They will know what to ask. You would be surprised how much wisdom they have just because they invested in other companies in past. So please do not approach any of the investor with any bias. You would be surprised, but remember to ask questions. Don't be afraid of approaching investors from different angles to challenge them. After all, you need to feel comfortable with your potential future business partner. So as many questions as you may ask, that's the better for you. But there are some things that are important, and there are just a few examples of what may differ among investors. So the first one is ticket, and ticket is the level of investments that potential investor can give you. So in practice, it means that there is investor A, B, and C, and investor A can only invest up to the amount of $1 million US. Investor B can invest up to 4, and investor C up to $10 million. And these are the tickets that are being made within the investor itself. These are the limits that such investor decided that they will not go higher. Well, in very rare occasions, they may do not follow that rule, but in general, these are the questions that should be asked any investor. What are the ticket for the investment? The other one is control, and this is very important thing because investors differ a lot in this field. Some investors will, from day one, ask for control of the company, but not in a way that they will control the company instead of you, instead of developer, but they may ask to give them the position on the management board, advisory board, some kind of other reserved rights in the agreements that you will sign with the investor, for instance, to block the sale of the IP or block the issuing new shares by the company. So these are the questions that should be followed, that should be asked by you to understand what's the approach of the investor and how they want to cooperate with you within the company. These are the important questions. And the support is the area that I mentioned already. It's the level, the area where you can receive. This is what the investor can give you outside of money. So. The QA, the knowledge of the industry, the connections, for instance, with potential publishers, other players in the markets. These are the very advantageous position for any developer if he's able to find an investor who knows and wants to give that kind of support. And recently, well, not recently, but year after year, well, at least in the video game market, this is the one that we advise to. We see an increase with respect to the support that is being provided by investors. Investor wants to delve into company more and more. They want to help as much as they can. They believe in the success of the companies, at least most of them. So these are the factors that they should be asked. It should be asked by you as a developer. And the last question here is that it is a frequent question that we receive is a question whether we should follow and go with domestic or foreign investors. And there is no simple answer to that question. It all depends on your idea of running the company, the project that you run, the amount of money that you would like to raise. From the very practical standpoint, there is a tendency, which is not, it's not surprising, that Polish investors generally invest with the lower ticket than international investors, but not because they don't want to invest higher. It's because, well, international investors have more money. It's as simple as that. So this is an important information for you to understand and comprehend, so you would not be surprised that if you spend a couple of months discussing potential investment with Polish investor, and then you receive an offer with the amount of 1 million zlotys, for instance. This is not because that investor do not believe in the company itself, it's just the ticket is lower. So make sure that you understand your company like within yourself before you start poaching investors, because if you need 20 million to operate and run the business, well, probably you should need, and you should probably look for investors outside Poland, or at least try to do so, or find several investors in Poland. That's also possible. And now we have a very brief overview of the transaction itself. These are not, well, it could be possible to add more points to this roadmap, but in general, the transaction looks like this. You approach or being approached by investor, and this is the stage of informal talks. You get to know each other, you build on the trust, you try to convince the investor that you're the good target for the investment, and in exchange, the investor wants to give you the promise that if you follow with that investor, that's the best approach. That's the informal talks. And it usually follows with signing of the NDA, which is the non-disclosure agreement, where you decide and you agree along with the investor that what you discussed between yourselves will stay protected, and you will not disclose it to the public. And it can also be in the form of it can be linked to the commercial talks, or it can predate the commercial talks. The commercial talks, it's the moment where you start and discuss how much money will be invested, what would be the amount of shares that you would give the investor, what would be the rights and obligations of both parties, etc., etc. And once you have back-to-back understanding of this commercial agreement, term sheet will kick in. And this is the stage where, well, you should go and find a lawyer, basically, because from this moment forward, this is being more legal. It's not just business. It's not just talking and giving yourselves a promise of the investment itself, but also these are the legal documents that start flowing around between you and investor, and this is the moment where you start signing things. And the term sheet itself is the very brief overview of back-to-back understanding between you and an investor. What will be the subject and what would be the scope of the transaction? The amount of money invested, the amount of shares, reserved matters, etc., etc. Hubert will explain on that in a few moments. But that will be the term sheet, which will give the basis for the actual transaction documents, which are 2 points later. But before the transaction and preparation of the documents kicks in, there is a stage of due diligence. And this is very formal, very lawyerish part of any VC transaction. This is where the lawyers of investor will basically go through the entire company and check through your agreements, from your records, from your cash flow. They will ask a lot of questions. They will want to make sure that the IP to the game stays with the company, that there are no problems with employees, with taxes and other obligations. It may take time. It may take as long as a month or two. Sometimes it takes longer. And as a result of this, the investor will receive the due diligence report that will be provided to him by the lawyers. And based on that, if there are no showstoppers or red flags, investor will make a decision whether to move forward or not. It's very rare that at this stage the investor would say that it will not move forward, unless, for instance, the due diligence report disclose that there is no IP in the company, or that the company itself infringed rights of third parties from the day one. That could be disastrous for any company, but it never happened in our experience with Hubert. But at the same time, when publisher receives due diligence report, it will also give him a basis for giving you the instructions that you will have to follow after the transaction. So, for instance, and it is very common instruction from the investor to take care of data protection, to implement GDPR or some other basic documents within the company, but it can be made after the transaction is being made. But at this point, investor already knows that this is something, there is some work to be done from the legal perspective. This is not something to be worried. You should not worry that you will receive some kind of instructions or reservations from the perspective of investor. This is normal, and there is no single company that we know or are aware of that would not receive any instructions after due diligence report. There is always something, regardless of the level of maturity of the company. And the transaction documents are the actual documents that enable you and the investor to enter into the deal. They may have different forms, they may have different names, but basically, based on that documents, you will receive money in exchange of giving shares to the investor, and also you will assume some rights and obligations, and as well as investor. And the last part is closing. This is the actual execution of the documents, and after that there is registration in the court, and you will receive the wire transfer with your money. That's basically the transaction roadmap in a nutshell. Hubert?
Hello. Okay. Let me just start by saying one thing. Obviously, as Michał pointed out, what we are saying is really those are like some general remarks. It's really hard. This is quite a long, complicated process. And please, we have a stand downstairs. Please visit us. Tell your friends about us also, because trust me, it's quite hard to be a lawyer in this kind of event. People don't want to talk to you that much because they come to us and say, are you hiring? I'm a Unix developer. No, I'm a lawyer. It can be rough on us here. Just a few remarks. Let me just put all of those. Sorry. Let me just put all of those on screen because I actually have little time. VC versus mature acquisition. So the main thing that actually that shapes the transaction is the fact that usually in a VC deal, as Michał mentioned, the investor is investing in a very, very early stage. And that means that the investor has different expectations and wants different rights than, let's say, an investor who's buying out the company after it's in business for 20 years and the company has already some profits. With regards to the drivers of growth, and it's actually a very interesting time to be a VC lawyer, because first of all, there's a lot more VC out there than it used to be. There's a lot more money, a lot more investors. There is also significant state investors. Some of you probably heard about in the Polish context. This is the PFR, Polski Fundusz Rozwoju. Basically, a lot of companies, a lot of individuals realize that there is a lot of money to be gained if you are investing in companies earlier, and the returns could be spectacular. And especially considering all of the environment, the interest rates that were before, they wanted to invest, and that meant that there is like more and more transactions, and the tickets are. There are more and more tickets, but this slowly is starting to change. Considering the interest rate environment and also the political environment, everything that's happening on our eastern border, we see now that it's more and more difficult to close a VC fund, and a lot of people who are seeking for investors, it's also becoming more difficult for them to find an investor. And this is actually, I think, one of the most interesting questions is how much is my company worth? And this is probably something that you're also asking yourself if you're trying if you're approaching an investor or are being approached by an investor. And all I can tell you is that there's no rule. With Michał, we advised in transactions in which people were giving away 40% of the company for million zloty, so essentially $250. We've also advised in a transaction, and the company it was not a company that was established yesterday. It had some operation profits. There were serious people backing it, but it was the only investors that they could find. And we were also advising a transaction in which a company that we established as a law firm, they received more than $2.5 million for 10% of the company. So there is no rule. And if somebody tells you that there is a rule, and I'm an expert in evaluating startups, we actually had a call with one of our clients who, and there are like 4 developers. They approached us and they said that they received an offer that they would get around 2.4 million euros for 20% of the company, and we don't believe it. And we said to them, ask for 3 million. And the guys, they asked for, I don't remember, 2.8, and they got it at the end. The investor gave them 2.8 million for 20% of the company. And after the transaction, the guys told us, you're right, we should ask for 3 million. We would probably get it. Because there is no rule. I mean, essentially, what Michał said, the size of the ticket, it's only reflected by how much the investor believes in you, in that idea, and how much money he has. And before, like in the previous environment, it's a little bit changing, but still, the tickets are becoming more and more, are becoming bigger and bigger. And also, one thing that you need to have in the back of your head, especially if you are an investor, is that, I mean, I know the research that was made a few years ago, 90% of VC transaction failed. People invest, the companies then try to develop something, they fail, they are not a success. More than 90%, I believe it was more than 95%. So from the point of view of an investor, being a VC investor, this is actually very tough, very, very risky. And essentially, it's a high risk, high reward game. And that's why the returns on VC investments are so high, because, I mean, the ones that are actually successful. Because a lot of those fail. So that's one of the things. If you, that's like, let's say, the litmus test that allows you to identify an investor with whom you would like to cooperate. An investor that talks about risk, that he is taking on risk. He needs to he needs to have an agreement that secures his interests. That's probably not the investor that you would like to go with. Investor that talks about helping you, he accepts the risks. He knows that his investments may fail. This is probably the investor that you would like to go with. Yeah, who pays for lawyers? You know, I just and I'm sorry for the I want to apologize to all of the investors here, but remember that especially if it's your first VC, you should have your own lawyers. You should have your own advisors, because you are the fragile party, and that you are the ones who don't know the market standard, and also sometimes there's one especially predatory investor who tells, that's very active on the Polish market, who says, we don't need lawyers. We don't need lawyers. Lawyers only complicate things. You know, we want to make a deal, and they will, they will drag on things. That's not I can tell you that's not a professional advice. And from our experience, people sign really, really shitty deals when they do that. Deals that are really not in their interests. And you shouldn't be afraid of. And remember that the standard, and this is an Anglo-Saxon standard that is being more and more popular in Poland, that the company pays for lawyers. So essentially, if you have no funding, the company will pay for the legal advice for lawyers from the proceeds of the investment. So essentially, the investor has to pay for your lawyers, has to pay for people who will be advising you in this context. And this is a standard. And if the investor says that, well, no, I don't want to pay for your lawyers, then you can tell them that, well, I'm sorry, this is how things are done. An investor who is experienced, who knows the market, he shouldn't have a problem with that. And the last two things that I wanted to mention is actually just this standard documentation issues, and first and this thing, personal liability. So what we do with Michał when we are advising people who are founders, The thing that we want to be sure is to protect them personally. And the main thing that you should look at is, first of all, you should search for those really, really small, nice things called liquidated damages, or kara umowna in Polish, that you will be liable for. And sometimes investors like to put really steep, really strong liquidated damages for weird breaches of contract. And sometimes they even want you to establish collateral over your own assets in order to secure the repayment of those liquidated damages. We've seen agreements where people actually took mortgages on the house of their parents in order to secure the investor in certain cases. I mean, what's market? Obviously, the investors want to protect the company, so we would say that non-compete, so the investor gives you money, you will work in the company, but you will only develop that company, and you can have liquidated damages as a secure of that obligation. This is market. Obviously, it depends on the scale of the liquidated damages, because if the investor gives you $1 million and he wants 10 million of liquidated damages, that's a little bit too much, at least in my opinion. And a second thing I also wanted to mention with regards to your personal liability, sometimes you need to make representation and warranties. So you need to tell the investor that the company has IP, the company exists, and so on. And you should feel comfortable in the reps that you're giving. And especially in no circumstances should you have any liquidated damages securing those representations. And what we are doing, what we are doing with Michał when we are advising, we are afraid of a situation in which you would be a slave to an unprofitable company. So we think, and sometimes investors have different ideas about how this should look, but you should remember that if you have a big non-compete in your agreement saying that you cannot work anywhere else, and the investor only gives you some money for the function of the company, it may turn out that the money runs out because you actually paid for the developers. The investor doesn't want to give you any more money, but you cannot work anywhere else. So you should try to aim at least to have the contract saying that if you say that you can basically abandon your investment, that you don't have to be as a founder, you don't have to be chained to the company. I am resigning from the company, I am giving away my shares, and in that situation you should not be bound by non-compete, because obviously you don't want to be a slave to that enterprise. The other thing that you should have somewhere in the back of your mind, and Michał already alluded to that a little bit, is how much control of the company, how much control over the company you're giving. And as I mentioned, in the last 5 to 6 years, this is really changing. Let's say in the earlier times, let's say 6 years ago, it was pretty normal that you had a Polish investor who had a small ticket. Let's say he was giving, I don't know, $500,000, 2 million zlotys for 40% of the company. But for that, he had almost complete control over the company. So he had a member of the management board, 2 members of the supervisory board. He had reserved matters, and as Michał mentioned, reserved matters are the things that you cannot do without the consent of the investor. The things that you cannot, and those can be things that are obvious, like liquidating the company, for example. I'm okay with that the investor should have a say. But sometimes they can be things like concluding a contract that, for example, concluding a contract that with a value exceeding 200,000 zlotys, or like I know 50,000 zlotys. So basically, sometimes the investors want to have too much control, and the standard here actually is changing, and we are having, and this is obviously Polish, let's say domestic investor, has different ideas about how the corporate governance of the company post-investment should look than foreign investment. Basically, foreign investors, they don't like to get involved in their day-to-day business of the company, and they don't need to have like really big safeguards. The only thing that the foreign investments would like to have is a right to nominate a member of the supervisory board. Not the management board, so not the zarząd, but Rada Nadzorcza, the supervisory board. And sometimes, even if they put significant money in the company, they don't nominate that. I am a member of a management board in one of those companies, actually, who is sitting on the place of the management board of the investors. So it really differs, and things changed because now more and more domestic investors, they also realize that maybe I don't need to restrain the founders so much. Basically here, the investors realize that you cannot legislate success, and the founders are the one who should be responsible for running the business. And if things don't happen, then, well, this is VC. You know, people are getting more and more accustomed to the fact that the business may not be a success. And we're actually advising founders in, let's say, failed VC projects. We are telling them what's their rights, what they can do, and sometimes those are tough stories, because when they were entering the agreement, they were persuaded by the investors and the investors' lawyers that, you know, this is a simple contract, and they ended up in, you know, really bitter, long litigation with a lot of stress and so on. But this is changing, and also please remember that you don't have to have 51% of the company in order to have control. You can have reserved matters, you can have other mechanisms, you can be able to appoint supervisory board members, you can be able to appoint management board members, so you can have a significant degree of the control over the company with just 10% of the shares, just 10% of votes on the meeting. And yeah, I would say that's it. Again, I cannot stress how important it is to visit us at the booth and help us survive this event, and also to have your own advisor once you're being approached by a professional investor, because remember, you are the fragile party, and you can also end up with an agreement that is not okay for you. And we've seen cases of people who had like really great amounts of stress, and I also think that you also heard those stories that they came up, that a predatory investment actually approached them and they had problems. Yeah.
But at the same time, you should not be afraid of VCs. This is a good approach. That's a very good approach.
Yeah, definitely don't be afraid. Yes, and ask the people. This actually can take your company to a completely different level, because as Michał said, I mean, even Polish VCs, I mean, there are, especially if this is like a big corporate VC fund, our clients tell us that, you know, they go to a call and there is a president of the biggest gaming company in the world, for example, giving address to them. This is really something, a wise VC is like a second, that's why, you know, Michał said that you should be honest. A wise VC is like another partner in the company, and it can really, and a wise investor can really bring the operations of your company to a different level.
Yep.
You have any questions, comments?
Yes. Do we have some spare minutes? Oh.
Outbursts? No outbursts. Nobody is indignified.
One mic, if that's okay, to share with the audience.
Okay. You mentioned that one of the criteria to attract a VC is having a financial stable company. Do you have any sane examples how to reach that point?
Well, by saying that stable company, I meant that you should understand the problems that your company have, if you do have problems, and you know how to address them to investor. It does not mean that you need to generate profit as a company before VC round. This is not the idea. You may have only costs, but these costs should be at the level that are approachable by your company. So by way of example, before VC, if your yearly turnaround it's $1 million, you should probably refrain from assuming any liabilities or taking loans with higher interest in the amount of like $5 million with the deadline for repayment in the next 18 months. Because that would be probably impossible for you as a company to adhere to that obligations. But at the same time, if you take a loan for $500,000 for 2 years in advance, that's okay. That's understandable because you need to be practical, and this is what investor would like to see from you, that you show at least the basics with respect to how to operate the company. You don't need to be an expert. If you would be an expert, you would not need a VC investor, but you need to have some kind of degree of skills that can demonstrate to investor that you are a good prospect as a founder.
Thank you.
Oh, yeah, I'm coming.
Hi, I'm Tomasz Palmi here in Deep Studios. I'd like you to touch a bit on the issue of soft money, smart money. Because oftentimes when you talk to investors, there are some promises exchanged about additional services other than money, like we'll help you with marketing, accounting, whatever that a particular business needs. And I was wondering, how do these kinds of softer promises, if ever, get reflected in the contracts? How can we actually secure that these promises are delivered on?
Well, I can tell you that on the level of documentation, you don't secure this, in a sense that we've seen, a lot of this kind of investment agreements, and in none there we haven't seen an investment provision with the stipulation saying that the investor will support the company, giving them marketing services and so on. Those are soft commitments by the investor. The only hard commitment that the investor makes is that he will commit cash in exchange for certain amount of shares or stocks in the company. Well, essentially, it's a little bit also from the investor side. Essentially, a lot of things in VC comes down to trust and interpersonal relationships. If this is, let's say, if you're being approached by a really, really big companies, one of the biggest gaming companies, then you can be sure that they will provide those agreements and that they will, those will be smart money, and they will take you in their sphere of, in their, like, let's say, startup culture, and they will help you. If you're being approached by a small Polish fund that has money that's taken from the Polish Development Fund, or it is, I don't know, it is some kind of fund run by the Polish local government, because this is also this is also our experience, then you may be more or less sure that he tells you that he will help you with accounting, but at the end he won't. He will just like you to run his business, and he will just like you to continue running business. I just wanted to mention one thing, because I actually realized that I forgot one really big thing in my presentation, talking about those, control over the company. Yeah, that's one of the biggest things that is a problem in this kind of agreements, in investment agreements, is control over future rounds. So usually an investor in Poland who comes especially at the earlier stage, he wants to have control, he wants to have a veto on future funding. So if you find a future investor, then he basically has to agree for any future funding. And this is something that, I mean, sometimes we manage to fight in order to get some kind of exceptions, but please remember that especially investor who has a small ticket, I know he commits early, but the international standard for the VC is that early backers do not have a veto rights over future financing. They get anti-dilution, so that their portion of the shares will not change. They can take the shares on the same rules than the future investors, but basically they do not have. In Poland, I believe there is still a market standard that the early backers have a veto right. But just remember not to be stuck in a company, and that the investor will only commit 2 million zlotys and he will not commit anything more. This is just a remark that I forgot to speak about in my presentation.
Okay, so probably the last question for today.
Answer any other questions next to our booth.
Thank you guys for the constructive presentation. I represent sharks, as you mentioned here, you know, but I don't consider myself as being a shark. Actually, we look at the studios, at the game founders as possible partners, and I wanted to react to one of your thoughts. You mentioned that usually experienced investors pay for the lawyers. And I don't know, maybe it's my experience is a bit different. Yes, I would say we pay for that, but not doing that directly, because usually studio like founders pay for the lawyers from the investment.
Yeah, that was a shortcut. Hubert said that
so
the investor
I wanted
pays,
to point
yeah.
out that to make it clear, you know. Just,
If I may, just yes. Obviously, that's true. And for all the founders, if you are searching for a VC lawyer, then usually lawyers who are experienced in VCs, they can make an arrangement called a success fee. So you will pay like upfront for like, I don't know, 5,000 or 10,000 zlotys, and then they will be the lawyers will get much more money after the transaction succeeds. And this is a success fee, and that makes an incentive for a lawyer to actually also work in order to make the transaction work. And yes, that's true. Obviously, you're right. And I just wanted to say that really, it's first of all, this is a developers conference. If it would be an investors conference, then I would be speaking a little bit differently. And we also have. We also know cases of founders who were, acting a little bit not wisely and spending the money left and right and not finishing their business. But a little bit, what we see in the Polish market and our presentation was dictated by our experience. And our experience is that really there are predatory investors out there, and we've seen contracts that I almost got bald, advising, or my teeth were hurting me when I read those contracts. Sometimes people sign, really difficult contracts, and they have, years of litigation. They lose really a lot. So just please be careful. And just remember that it's not the last question. You can come to visit us at our stand, and we will answer whatever you would like to, any questions that you have.
We actually encourage you to come over to us and share a glass of beer over during the party. Maybe not necessarily even at the stand, but tonight.
Why not next to the stand?
Okay, so thank you so much, and a round of applause to Hubert and Michał.